Welcome to the Money and Wealth Show. Brought to you this week by AmericanManganeseInc.com. Here's your host, Danielle Park.
This week we're coming to you from the Agora Financial Symposium in lovely Vancouver, and my guest today is renowned financial author John Mauldin. We're very happy to have you in this part of the woods. You're a traveler all over the world. I must say I read your Thoughts from the Front Line each Saturday. It's one of my favorite financial publications.
Well, thank you. You're very kind.
And I am noticing in there that you have a very hectic travel pace. But to get that letter each week is quite interesting. I think one of the things that I think you're so exceptional as a financial writer is that you're able to sort of amalgamate many different viewpoints from around the world, people that you have different business relationships with, and get the pulse literally of what's going on planet Earth. And then your latest book, Endgame, which you've just released, talks about the financial crisis in terms of where we are today.
Yes, hold it up, everybody. Yes. We should buy this book, yes.
The end of the debt supercycle and how it changes everything. I actually read it on the plane coming here, and it's excellent. And I noted that one of the things that amazes me about you, John, is you have a Bachelor of Arts degree, a Master's in Divinity, and yet here you are writing some of the most cogent financial stuff in the world today. And were last week summoned, if I'm not mistaken, to Washington to speak to some of the Republicans who are trying to figure out, perhaps was it bipartisan?
It was actually tripartisan because Lieberman was in there, and so he's independent. There were a couple of Democrats in there, there was 10 senators, and we were there for an hour and a half, 2 hours. And you know, I'm told that just doesn't happen. But they were very worried. These are very, very concerned men. They, you know, and I didn't help their concern because I'm telling them how bad Europe is going to be, and Europe is subprime on steroids. Now there are people that disagree with that, but I think Europe has the potential to be a very, very serious problem unless the Germans decide that they want to finance the rest of Europe, and you know, maybe they will. So we don't know, but we have the potential for a very, very serious crisis on our hands in the middle of our own debt crisis, deficit crisis.
So did you feel, though, that you were bringing news to the American politicians with respect to what's going on in Europe, or did you find that they were very cognizant of, you know?
I think a lot of it was news, and I will say this: they were sitting, taking notes. They were asking very pointed questions. They asked hard questions, pushed back. I gave no quarter. I mean, it was a very hard-hitting conversation because the reality is that we're at the end of the debt supercycle. That's the book, and you know, and I try to go through the basic economics of what it looks like when you come to the end of the ability of sovereign governments to borrow money. Now, we've seen what happens to Greece. We know that Ireland's going to default. Portugal's going to default. Italy's interest rate is now higher than the growth of its interest is higher than the growth of its economy. That's Ponzi financing. I mean, this is very, very serious.
And yet,
and so that type of recession, that type of world is significantly different than a business cycle recession.
So do you find, though, I think that what I hear most on the news or the financial commentators today, they seem to be focusing on entirely the wrong thing. They seem to be talking about things like short stops, like if we don't raise the debt ceiling, we're going to have a recession. And isn't it more a function of the great inflation of debt and consumption that was in the period before that has brought us to this inevitable conclusion?
No, you're absolutely right on. And you know, the debt ceiling is a sideshow. We'll get that solved one way or another. I will say this, I was with leadership in Congress in the morning, and then I was with the senators, and these were, you know, 10 of the more wired-in senators, and this was a serious room. And none of them had a clue as to how the debt ceiling thing was going to work out. And you know, by the time maybe our listeners see this, we'll know how it works out. But at the moment, they're all like, we don't know what's going to happen. Now, I think we could come to August the 2nd and not have anything happen. I don't think the markets will do boo. If we get to August the 19th, well, maybe. If, you know, Standard & Poor's rates us at AA, well, really, we care about what Standard & Poor's says? I mean, it's like they've been so good about rating anything. If we get our deficit act together, we'll get our AAA rating back. If I had a bottle of wine here, which I should have made you bring wine so that I could, you know, that should have been the price of the interview. But if I had a bottle of wine, I would look at it and I would say, listen, we as a country, because we've made bad choices, you know, we ran up our deficits, we did subprime, we allowed banks to go to 30-to-1 leverage, you know, yada, yada, on and on, repeal Glass-Steagall. We now have got to the point, just like teenagers who put off the difficult choices, we now are going to have to face this much pain. We can face it all at once, which is kind of what the Tea Party guys want to do. Let's just cut everything. Well, that's a depression. We could turn that bottle on its side and take our pain over time of 5 or 6 years, which is what I think we should do.
Or, if I might just hold you there.
Yes.
We have to take a quick break.
Okay.
But when we come back, I want to ask you more about your glide path option.
Okay.
Which you say is a practical plan to move forward. We'll be right back.
Always consult your investment professional before making any investment decision. You're watching The Money and Wealth Show.
American Manganese, Inc. has a manganese deposit in Arizona. Indicated 6.7 billion pounds. Inferred 8.9 billion pounds. Potentially the lowest cost producer of electrolytic manganese. American Manganese, Inc. has a projected cash cost of 44 cents a pound. The metal trades near $2 a pound. Do the math. Trading symbol AMY. Visit AmericanManganeseInc.com or phone me, Larry Ray, at 604-531-9639.
The Money and Wealth Show is archived online at TalkDigitalNetwork.com. Here's your host, Danielle Park.
We're back with my special guest today, John Mauldin, a renowned financial author and someone who has recently written a book, Endgame, The End of the Debt Supercycle, which has, the thing I like about the book is we're in a world today where people are running around like chickens with their head cut off, talking about the end of the world, the sky is falling, a lot of doom and gloom. And I like to be a little more pragmatic if possible. I have children, you have children, grandchildren. We have to have some hope that there is a way back towards more reasonable policies. And I think that part of your presentation to the politicians was not just that we're in a pickle, but there are some practical steps we need to include if we're going to work our way through it.
Well, in the last segment, we were talking about, you know, this wine bottle of pain. And I think we should take our pains over time, reduce our deficit by, say, 1.5% of GDP every year for 5 or 6 years and get it down to a manageable level. Now, that's going to reduce the growth rate of our economy.
From practically not even 2 at the moment, you're taking 1.5 off.
I'm taking 1 to 1.5 off. So, yes, I mean, we are consigning ourselves to a slow growth, high unemployment.
Higher unemployment, actually, higher from here.
There will be higher at some point because we will have a recession at some point, because that's what happens in deleveraging recessions. Sovereign debt crises are always follow banking crisis. We had one, the banking crisis 2 years ago, and about 3 years later, the sovereign debt crisis show up. We're on time. I mean, as much as I love my book, of course, I think the most important book of the last decade was the book called This Time is Different by Carmen Reinhardt and Ken Rogoff.
Yep.
Where they talk about 266 financial crises in 60 countries, and where they simply say, on average, countries that go into this cycle have 7% increase in unemployment, and they lose about 23 to 25% of their tax revenues. Well, we're right on target for that. The McKinsey study shows that once you hit that deleveraging period, and we haven't started in the U.S. because the government's still leveraging it up.
Right.
But when they start reducing that,
arguably in Europe too, they've done the same thing.
Europe,
China even has done the same thing.
Japan's a bug in search of a windshield. I mean, the entire developed world is almost simultaneously, if you're talking over the next 3, 4, 5 years, going to have to deleverage. Well, this is a slower growth, muddled through, in some cases, depressionary, if you're Greece or Portugal, or it's uncomfortable, but we do get through it. I mean, my laugh line, I get at my speeches, is that we made it through the Depression and World War II and Jimmy Carter. So, America's not going to go away. The book I'm writing now, that I'm working on, is on what the world's going to look like in 20 years. And I'm a wild-eyed, flaming optimist, but we have to get through this reset button.
And we have to break old habits, don't we? I mean, to get to some of the exciting developments that you're talking about, do we not have to start broadening our ideas of things like energy and?
Well, those things will happen inevitably. That's just what, I mean, that's going to happen anyway, in spite of government, not because of government. The reality is that we're hitting the reset button. You're a little bit too young to remember, but there was a time when sometimes we would be typing along on our computers and we would get the blue screen of death. And it would come up and there would be nothing you could do. I mean, you couldn't even turn the computer off. So you'd have to go to the wall, unplug it for 15 seconds, plug it back in, then turn it back on and reboot. We're hitting the reset button. And it's going to take, instead of 15 seconds, probably 5 to 7 years. But we get through that. Hopefully, we don't wait till we hit the wall like Greece and then we have that wine bottle full of pain all at once, because that will mean far deeper cuts in Medicare, far higher taxes than any of us ever want to contemplate. I mean, the real conversation we have to have in the United States is how much Medicare do we want and how do we want to pay for it?
And probably some kind of a value-added tax or something.
I think that the reality is we're going to have to consider a value-added tax, but for that, the Republicans need to extract massive tax reformation, lower personal rates, lower corporate rates, getting rid of the mortgage interest rate deductions, a lot of the agricultural subsidies. The farmers don't need agricultural subsidies anymore, really.
Oil companies.
I mean, oil companies, ethanol. I mean, dear God, what a stupid concept. I mean, all we've done is raise the price of cornmeal for the rest of the third world. I mean, there are things we can do, but we still are going to have to figure out how to pay for Medicare, because the polls tell us that people want Medicare. And I mean, I'm talking to the senators and they're all telling me, I mean, they all agree. It's 100 to 1, the mail coming in saying, don't touch my Medicare.
So were they open to the idea? I mean, if you listen to the media, it's Republicans are 100% against any new taxes.
Well,
were they open to that kind of an idea?
They're going to have to be open. It's going to have to be Nixon going to China, but it's not going to happen until 2013, and we're going to have a Republican president. It will never happen under Obama. He is incapable of dealing with the type of changes and cuts because he's just a reflexively far left of center person, and which means that we would hit the wall and he would go down as the worst president since Herbert Hoover. I don't think that will happen. My personal opinion is that God could not get reelected with 9% unemployment. And as long as the Republicans don't nominate somebody that twitches and drools when they, which they are perfectly capable of doing,
so
by
far,
the way.
I'm wondering,
well,
I'm watching.
My readers know, my 1 million closest friends know that I'm a Republican. I was on the executive committee for the Republican Party for 10 years in Texas. But I haven't seen anybody that's, just making my heart beat. We are going to have to make very, very difficult choices in 2013. If we don't, I think the bond market in 2014 starts jerking our chain because they're going to be watching Europe implode, they're going to be watching Japan implode, and they're going to go, you guys aren't serious.
We have to take another break, but when we come back, I want to talk to you about this idea of the big bad bond market putting its foot down. And I have some questions about whether or not captive capital has as many choices as we sometimes think. We'll be right back.
You're watching The Money and Wealth Show.
Molycorp Gold Corp has substantial assets. Magnesium deposit, inferred 52 billion pounds. Molybdenum deposit, indicated 1.9 million tons. Inferred 1.8 million tons at 0.087% MO. Past silver producer, average 182 ounces per ton. Trading symbol, MOR. Website, molycorp.com. Or phone me, Larry Ray, at 604-531-9639.
The Money and Wealth Show is archived online at talkdigitalnetwork.com. Here's your host, Danielle Park.
We're back with my special guest this week, John Mauldin, and before the break, you were talking about the bond market, and this is a question that I would love to hear your take on, because it occurs to me that we have a good deal of captive capital in the world, which is mandated to be long bonds, long fixed income. And when you consider that we've had this bubble in asset prices, some would say a bubble in bonds even, worldwide, how does that capital allocate itself when there are perhaps no really good choices, when they have to choose between places to go?
Well, that's the whole point. They get to choose. And by the way, it's a brilliant question, and it's one of the most important ones. The reality is, if you look at Italian bonds, the rates have gone up 1%. Spanish bonds, the rates have gone up 1% over the last month because the market's beginning to see the risk. Interest rate expenses are rising faster in Italy than their economy. That's a Ponzi financing system. So people are starting to say, we want more money for the risk. So the bond market will allocate to where they think there's less risk. At some point, if the United States does not get its act together, if we don't get what I call in the book the glide path option of reducing our deficit slowly over time, the market will come to us and say, we want more money. And our interest rate expenses will shoot up. We'll have a crisis. And, we'll have to make deeper cuts and higher taxes than any of us can possibly imagine right now, but that's just what bond markets do. And so that means they go to Europe, they go to corporate bonds.
Corporate bonds, you were mentioning that the capital is flowing there over sovereigns today.
Well, I mean, the irony is there's a lot of corporate bonds that have lower interest rates than government debt, because people are recognizing there is a risk to government debt. I mean, European banks are leveraged 40 to 1.
Federal Reserve's 54 to 1 or something,
Well,
right?
yeah, but the Federal Reserve can print their money. European banks can't.
Right.
And they're allowed to leverage that up because their regulators said, well, there's no risk to sovereign debt, so you don't have to reserve for it.
Right.
Well, it turns out that maybe there's a tad bit of risk on that reserve debt, of that sovereign debt. And
so you
when
think
that hits the wall, I mean, as I mentioned earlier, I truly think that Europe, unless Germany decides to just put their entire credit line against everything, Europe could be worse than subprime. It could be a true global crisis. It creates another banking crisis. Things freeze up. You have trouble getting money back and forth around the world. Global trade freezes up. I mean, it was ugly the last time. It could get ugly again. And this time, we don't have the bullets at the Federal Reserve or the ECB that we had the last time.
so. Maintain liquidity, maintain safety.
Yes.
Keep your eyes wide open.
Yes.
Read Endgame.
Yes.
Thank you.
Make my $1.92 when you buy the book.
We have to take one more break. We'll be right back.
You're watching The Money and Wealth Show.
American Manganese, Inc. has a manganese deposit in Arizona. Indicated 6.7 billion pounds. Inferred 8.9 billion pounds. Potentially the lowest cost producer of electrolytic manganese. American Manganese, Inc. has a projected cash cost of 44 cents a pound. The metal trades near $2 a pound. Do the math. Trading symbol AMY. Visit AmericanManganeseInc.com or phone me, Larry Ray, at 604-531-9639.
The Money and Wealth Show is archived online at TalkDigitalNetwork.com. Here's your host, Danielle Park.
We're back with my guest, John Mauldin, and as a final word, John, could you tell our viewers where, if they aren't already getting your weekly newsletters, that they could sign up for that?
Well, they can go to johnmauldin.com, M-A-U-L-D-I-N, and just click on Thoughts from the Frontline, give me your email address. I have another letter that goes out every Monday night, Outside the Box. It's somebody else's letter that I find provocative.
Excellent.
I don't always agree with it.
Yep.
I've got a few other things that we send out and services. We help people find alternative investments, hedge funds, commodity funds, that type of thing. I mean, we're low key. I mean, you know, there's no pressure. I try to educate. That's what I am. My real role in life is I'm a filter. I read 150, 200 things, and I sit down on Friday nights and I say, this is what I've learned this week. And I try to give it to you.
And it's greatly appreciated. Thank you for joining us today.
Thank you for having me. It's always fun to be with you, Danielle.
Awesome. And thank you to Agora for bringing all these great people in one spot. And thank you for watching. Thank you for watching, and I hope you've enjoyed this series of speakers from the Agora Investment Symposium. I've had a lot of fun, and next week your regular host, Alex Akumas, will be back.
The Money and Wealth Show has been brought to you by AmericanManganeseInc.com.